Good morning. Welcome to the Brew. I am your host, Lex. Today is Friday, and that means Paulina is with us. She is going to talk about jobs report, the tech sell-off, and consumer health. Interesting stats that have been coming out. So let's have a look at this and break it down after the bell. What do you think, Paulina?
I like it.
We're getting there. Okay. I love it. Good to see you. How are you?
Great to see you. I'm doing really well. How about
Good.
you?
I'm doing awesome. Thank you. Oh my God. So your three topics, I must admit, okay, they seem scary, meaning it doesn't bode well for the market. And we saw this week on Monday, the market really get hammered. What's going on? Let's start with jobs report. What's happening out there?
Yeah, I think the jobs report is a great place to start because even though the tech sell-off kind of started before that, this was really the catalyst that took it over the edge. So we had a jobs report that came in. It comes in the first Friday of every month. So jobs grew a lot less than expected in July, 114,000 versus the 174,000 that was expected. Plus, unemployment rose to 4.3%. So what does this mean for investors? That's the most important thing. A couple of things. So first off, this kind of set expectations for the slower pace of economic growth. So this kind of sparked concern for investors that the economy might be slowing. It might not be in the most stable pace of growth as originally thought. So that's number one. And number two, it raised expectations that the Fed will be cutting interest rates in September.
Okay.
So those are the two things there.
Let me ask a question real quick before you go on. Is that so? The Fed will be cutting interest rates. Is that necessarily a bad thing, or what do we fear about that now? Or there's at all?
Yeah. So there's a gauge that investors like to look at to assess and estimate when and by how much the Fed is going to be cutting rates. And there's nearly a 100% consensus that they're going to be cutting rates in September. So this is going to be good for a few things. It's going to be good for high growth tech stocks that require a lot of investing in order to build out new things like AI build out and deployment, for example. We've seen a lot of tech companies invest billions in that. And when interest rates are lower, that has less risk for them to pay back any debt that they need. It's also great for consumers because it lowers mortgage rates. It lowers the rates that you have to pay back, like your credit card debt or your car debt or anything like that. So it bodes well for high growth companies and for the consumer.
Okay, got it. So this wasn't a pleasant number then, obviously. Yeah.
It was a lot less than what economists were expecting. And as a result, it sparked fears that the economy is slowing down. And when the economy slows down, that means that companies aren't going to be making a lot of money as they thought, which means their stocks might go down. So even though the economy and the stock market are two different things, they kind of work together. And that's why the stock market responded the way it did with the sell-off.
Okay, got it. Okay, I got to tell you, I am sort of bearish. I've been bearish for 30-something years, but I'm really bearish. Not even because of what happened on Monday, but just because in general of all this stuff. I think we're brewing into the Wicked Witch is stirring over the brew and being like, ha, 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 I told you so. No more helicopter money for you.
Yeah. So you don't think there are any bright spots in the market right now?
No, I wouldn't say that. Any's hard, but I'm not bearish to the point of Armageddon. I think I'm bearish for a nice, healthy, correction.
Right.
And then that's always good for markets. This market's been pretty powerful for a long time.
Yeah.
And that scares me more than anything that we don't have some sort of really turn your hair purple sell-off. I like to see those once in a while. I think it's just good, for the market at large, to have that consolidation.
Absolutely. I think over the past couple years, we've seen the market go to these extremely high valuations. Of course, it was pushed forward by those mega cap techs. So I think this is a healthy, I don't know if you can call it correction, but it's a healthy, way to level set the valuations that were just high flying. So
I agree. Yeah, good. Okay, we're on the same page on that one. I'm going to do a bell ring. Woo! All right, tech sell-off. What's happening? So we've had some tech earnings. Some have been bad. Some have been okay, though. Some have been pretty good. But I agree with you. Generally, tech sell-off is kind of a good term for this. What's happening there?
Yes, so we've had a bunch of tech earnings over the past couple weeks.
Yep.
Not all the results have been in line with expectations. Some have been. I think a big one here is Amazon. They actually missed on revenue expectations and forecasted a lower than expected revenue for Q3, which is crazy because we always think Amazon is like the stalwart of e-commerce. But a bright spot there was their AWS cloud unit, Amazon Web Services. That is the most important segment for Amazon, which accelerated its growth. Because why is it important? Because it's a higher margin business. So that means it's the, more profitable than other areas of its business. But yeah, some are saying that this big tech sell-off is a bit overblown because, these big tech companies, they're not growing as they used to.
Yeah.
However, there is still some growth left. We did talk about this last week. Another reason is that there's a rotation happening in the market where investors are going out of risky, high-risk assets like tech and moving into companies that are going to be benefiting in a lower interest rate environment. So that's another reason why tech keeps selling off.
Yeah. Okay. Makes sense. It really does. I can see that in these things. Do you, off the top of your head, I don't expect you to know this, do you remember some of the good earnings for the tech? I'm drawing a blank for some reason. I guess I could look it up, but I'm being lazy. NVIDIA did well, right?
So NVIDIA, it didn't report yet, but AMD, which Advanced Micro Devices, its competitor, it reported really, really good earnings. It was pretty upbeat, and that's because they still have a lot of demand, especially for AI powered laptops, personal computers. That's a key area that they provide chips for. And their customers still have high demand for their semiconductor chips. So that was a big a solid earnings for tech.
Okay. Yeah, that's true. And I think Apple was pretty good too, if I remember correctly. I think we had a big down day, and the only shining glimmer of hope in that day with a green up part was Apple, I believe. And I think Apple would have been up $12 had it not been the market been just hammered that day.
Yeah, Apple was, I remember it had a solid print. There was a weak part in China, which fell, don't quote me on this, I think it was like 6% year over year. It was a pretty, it wasn't good. They're not doing that well in China, but analysts were expecting that to be a weak spot, and they expect towards the back half of the year that to improve. But other than that, Apple had a solid print too.
Yeah, so they were pretty good. Okay, awesome. Last thing on the list, the consumer health of the consumer health. What are your thoughts there? I'm guessing it's not good. I'm getting tired of spending money on these damn groceries. They're so freaking expensive. I can't believe it. I can't eat out anymore either. It's too expensive.
I know a lot of people are sharing your sentiment for sure. And I think it's so important to have a close eye on the consumer, because consumer activity accounts for more than 75% of our GDP. So that's why you hear the news and they're heavily focused on how the consumer is doing. But it's a major theme this earnings season. And what we found is that there has been a significant slowdown in consumer spending. When we talk about the consumer, it's important to be a little nuanced, because you have the higher income consumer, but you also have the lower and middle income consumer, which that line has been fading a bit. But essentially what companies are reporting is that the lower income consumer has to be very judicious around where they're allocating their money. and earnings shows that they prefer to spend more on discounts and promotions.
Yep.
So you had companies like Wayfair, the home retailer, eBay, and Etsy, the online marketplaces. They all mentioned a cautious consumer as a major headwind for their results.
Right.
And I think this trend is going to persist towards the second half too.
Okay, interesting. So look, I told you I'm bearish. Do you feel bearish at all here? For short term, not forever, but what are you feeling? Do you have a Paulina Likos feeling? Do we have a Paulina Likos gauge here?
I think that investors have to be they have to do their research on what consumer companies are going to be working in this environment versus others that are out of favor. So, for example, if there are companies that are able to provide immense value to the consumer, I think those are going to fare well. So the worst performing sector, or one of the most underperforming sectors, is consumer discretionary. But you have a stock like TJX, for example. That stock is up over 16% year to date in consumer discretionary.
Right.
Costco is another stock that has been performing really well this year. I don't remember the year to date performance, but that's an example of ways that of areas that you can find that are doing well in an environment, in a consumer and retail environment that's just so bad.
Yeah. Okay. Got it. All right. I know you have to go. You're tight today. So great to see you as always. Brave the heat over there in the East Coast. And have a great weekend.
Thanks. You too. Have a great weekend, and I'll see you next week.
Yeah, Pauline, we'll see you next week. Talk soon. Bye, everybody.
You know how the financial world goes. Here comes the buzzkill. Please make sure to take some time to read this boring disclaimer. We will owe you one.